What's up, everybody? Gary Joe here. I'm a proud member of Increase University and Global FX Trade Club, and I'm excited to announce that our Forex trading training sessions are now underway. Yes, we have launched, we are open, and students from all over the world are tuning in to learn a skill that one would consider a bit esoteric. So are you a person out there that's looking to learn how to trade in the foreign exchange market, and you're looking for a group of people that can help you do so, you're in the right place. So by all means, get back to the person that referred you to this video. If that person is me, my contact information is in the description section below. Well, that's enough for me. What I'm going to do is I'm going to let you hear a 1-minute soundbite from other individuals sharing their experience thus far. Tune in. So you can feel as though you had a lesson today. You learned something today. Anybody learned something new today? Don't be shy. Have anybody learned something new today?
A lot, Gary, a lot.
Yes, indeed.
Oh, I've learned a lot. I'm so excited I came today. Oh, thank you, Gary.
Now,
we have learned a lot.
Awesome.
I'm so excited today. I was frustrated.
Yay. See, I'm happy. Y'all made my day. Y'all learned something new. And that's important. It's the mindset. It's when you first get in, you get excited because people say you can click a button. I even will tell you, you can click a button and make money. You can, but you're just not ready for that. But that's your end goal. Click a button and make money from your laptop, from your cell phone. That's the end goal. But there's a process to it. Exactly. It's a process. You got to trust the process. And as they say, when the student is ready, the teacher will appear. Well, we are here and our doors are open and we want to welcome you inside. Matter of fact, I'm going to invite you right now into one of our sessions in which we're teaching terminology and functionality, and also about MetaTrader 4, which is a trading platform in which you can trade in the foreign exchange market. So without further ado, have a seat, take a sneak peek. And if you see value in what we teach and you would like to learn more, get back to the person that referred you. So without further ado, see you on the inside. On this chart, I want to point out some things, and I want everybody to understand, because I got feedback from you, and some people are confused, and that's understandable. Again, some people may have some financial challenges. That's understandable as well. But what's most important is if you want to learn this. If you want to learn this, that was the deciding factor for me. You know, that I was confused at first. My head was hurting when I first seen this. You know, I got discouraged. I felt overwhelmed. I felt like I was behind everybody else that was having, you know, so much fun and success. I felt those feelings as well. So don't feel isolated. Don't feel like it's only you. I was discouraged. I was confused. I felt overwhelmed, and I felt like I was far behind everybody else as well. But the deciding factor for me was that I wanted this. I wanted to learn this. And that's going to be the make or break moment for you. That's what's going to propel you forward and decide whether you're going to move forward or not, you know. And you got to be honest with yourself. I'm not here to sell you. I'm not here to convince you. I'm just here to share and educate on how to use this platform, you know, what everything means, and you can take it in stride. Now, if you want to participate in our trading sessions, you know, which you'll only have access to now that we have officially launched in your back office, that's the only way you'll have access to our trading sessions. We have live trading sessions in the back office. And if you haven't checked that out, I'll show you what it looks like and where to go. If you logged in, let me log in. Oh, I'm already in. And you go to Increase You. Under here, it says live sessions. So Forex training will be where you'll have access to your beginner, intermediate, and you see all your videos. There's all your training, all your videos. That's what you'll get access to. Also, our live sessions. This is our live session area. You'll click on live session for New York, the HFX, that's the high frequency, the Sydney session, and the London session. When our traders, begin sharing and trading and training, you will come here at this time and push this button to get access to our live training and trading sessions. Okay, so that's where you will go at. So everything is now accessible. It's not accessible through Zoom group meetings or anything of that nature. It's through live sessions within your back office. So again, you have your educational material and you can learn at your own pace. That's what's ideal. Everybody's schedule is not the same. Everybody's schedule is not the same. And I understand that, and the company understands that. So you can learn at your own pace, and you could be a part of our live scenarios when we go to the market and trade. Now, what we're doing here is we're slowing things down. With me having the experience that I have of like confusion, discouragement, I took myself through what I call my 4-step process. And that's what I teach. I teach the 4-step process of learning Forex. And I slow it down because I know majority of the people need for it to be slowed down. When we in the live trading sessions or on the live calls, it may seem a bit too fast. And you may have questions. A lot of people asking other questions. You don't get your question, or you might feel intimidated. I want you guys to feel open and welcome, and I'm receptive to whatever question you may have. We slow this down. Everybody here is a beginner. Don't feel like, oh, being a beginner is a bad thing. No, being a beginner is a great thing. You have the opportunity where you have people coming together that's going to slow it down and help you get this information and gain understanding. And any question is a good question because somebody else is thinking the same thing or may have been too shy to ask. Okay, I don't mind taking my time and slowing it down and answering, how do you get that on the chart? How did you drew that box? Where did that come from? What does that mean? That's what this is for, to really help you. So you have no excuse for not learning because you have people that's beginners, intermediate, and advanced trainers. Okay, so with that being said, I want to go over a few things on this chart so that you can understand terminology and functionality. Because after you get through talking yourself out of the opportunity, second guessing yourself, not sure if you made a good decision or not, and you decide, you know what, I want this, you then come to the point of, okay, I'm going to eat this like an elephant, one bite at a time. Let me slow it down and do this thing one bite at a time. And the 4 steps, the 4 stages will be terminology and functionality. That's phase 1. Then after terminology and functionality, you have what we call strategy. You learn strategy. You're able to utilize strategies by learning terminology and functionality. After strategies, then it's application implementation. You actually start to do things, move things around on the board, and so on and so forth. But you need to know terminologies and functionalities and strategies to be able to have something to do. And last but not least, what happened to me, guys, is I realized that I knew terminology, functionality, and strategies and knew how to move things around on the board, but I kept missing out on the money, because things happen at the time that they happen. You have to be there, So I was confused. How was everybody else making money, but I'm not? And the reason why is because they were being alerted. They were being alerted from apps. And that's what we call call levels and alerts. So once you understand terminology, functionality, and strategy, and then you can actually go through the motions of applying those things on your charts, now you want to get alerted. You want to be able to tell an app, okay, when that blue line crosses the white line, can you let me know that? It might be 2 o'clock in the morning. It might be, 5 o'clock in the evening. But can you let me know that? Therefore, I can then go to the chart and look at it and decide on what I want to do. As opposed to me missing out on that cross of the 50 and the 10. So that's the process. So if you come in with the mindset of a student and slow it down, terminology and functionality, strategy, application implementation, and then call levels and alerts, you will be fine. You will be awesome. Don't compare your beginning with someone else's middle. And what I mean by that is you're at the beginning stages of your learning and education, while other people may be a little bit more intermediate or advanced. Don't worry about that. We all got to start somewhere. But if you stay consistent and you keep showing up, you'll get this. The overall goal is consistent positive returns. So if you can make consistent positive correct entries, you can do just that. So that's all we're working on, is getting our reps up. So let's go take a look at the screen and let's learn some terminologies and some functionalities. All right, so on this screen, we're looking at what we call, let me just click on, Oh, let me get rid of all this. So we can start from nothing. Okay. What we're looking at is a Euro USD pair. That's trading Euro and USD. Now, the Euro in this scenario, guys, is the base currency. That's the base currency. And the USD is the quote currency. So whatever currency is on the left-hand side of the pair is the base currency. That's what you are buying, if you were buying. And the USD is what you would be selling if you were selling. You believe USD, the dollar's going down, euro is going to go up. So if you were in a buy, you were buying for USD. If you want to sell, you were selling. Buying for euro, selling for USD. Now, that is all technical terms. Again, every time I'll share some technical terms because you're going to hear these terms, but I'll also break it down in layman's terms. Okay? So you're like, oh, I got that. Because you'll hear people say EU or G-Chef. You're like, what's that? They're taking something that's already foreign because you haven't learned it yet and complicating it a little bit more, because there are certain assumptions that is made. Now, it's no offense or no shade against any other trader or trainer, but I'm just telling you the difference. Like, this is Euro Chef. They may say E-Chef for short, but you hearing this for the first time, you're like, what's E-Chef? You talk about the euro dollar traded against the Swiss franc. Okay. Now, over here, some of these items may be repetitive, and that's good. Repetition is the mother of learning. These numbers right here represents open, high, close, low. Open, high, low, close. I'm sorry. Open, high, low, close. This is when price opened. This is the highest it went. This is the lowest it went. And this is when it closed. Open, high, low, close. Now, what that means, in this example, say we take this long red candle. Okay? When the candles are red, that's a representation of price declining. So it opened here, wherever the body is, wherever the body of the candle is, not these, what they call wicks, but wherever the body is, if it's red, it opened high and it closed low. All the wicks means is this is the highest price was, and this is the lowest price was. So you say, Gary, well, when you say price, what's price? If you look over here to these numbers represents price. So if I grab this horizontal line, all I'm doing is clicking on this horizontal line. And guys, I'll always emphasize when you come to the hands-on training, I know some of you still getting your chart set up, but ideally, if you could come with your cell phone and your laptop, or 2 devices, one being a laptop, where you can actually go to this exact pair, E-Chef, Euro Chef, click on that, or if you don't have it, you can go to View, Market Watch, find E-Chef. If that's not there, you'll go to View, Symbols, and then you can click on Majors. And if it's not there, well, that's not isn't gonna have USD in it. So you can find it by clicking on View Symbols, and you'll find the pair that you're looking for. All the pairs that's already in here won't show up in here because I already showed them, but you'll click on it and you'll click Show, and it'll show it inside here, but you'll find your symbols by going to View Symbols if it's not in here already. And the way you open up this Market Watch window, if you go to View Market Watch, the way you see the symbols, you go View Symbols if they're not shown up here already. Okay? So if I wanted to open up this chart, I would right click on Euro Chef. I will right click on it and click on Chart Window, and it will open it up. Another way to do it will be right here, Create New Chart. And then I can go to that pair. If it's not already there, it'll show up here. Okay. So those are different ways you can open up the chart, to be viewing the same exact thing that we're looking at right here. Now, as far as price, again, I grabbed that horizontal tool. I brought it over. I'm gonna do it one more time. I'm gonna close out this Market Watch window, hit X. I'm gonna click on this horizontal tool. Now, the line that's underneath, if you see my mouse moving, that straight line that's underneath of that cross is not where the line will be drawn at. The line will be drawn where the cross of the T is. So if I put the cross of the T at the top of this line of this candle, that's where it's going to show up. I just click and it shows up. Now, if I double click on this line, if you see right here at the end of this line, if I double click on it, you see a box showed up. That means that it's now selected, and I can move it up and down, up and down. All right, so I want it right here. Now this would represent on this red candle where price opened up at, which would be 1.07768 on this particular candle. All right, now if I wanted to see where price closed at, it would be right there, 1.07618. So this will be my open price right here. This will be my closed price. Up here at the very top, that would be the high. Down here at the bottom, this will be the low. So these will be my 4 different price points that will show up. Once this candle time frame was closed, we are looking at the 1 hour time frame. So each one of these candles represents 1 hour of price movement. So in this hour, price moved as low as 1.07594 and went as high as 1.07828. Okay. And it'll show up by you just highlighting or hovering over this line. 1.07594 was the lowest it was. and 1.07828 was the highest it was. So it opened here. Price went as high as here, and then it could have retraced and went as low as here, and then it closed right here. So in this hour of time, price fluctuate, open, high, low, close. And right here, if it opened right here and it went out here, right, at first it was a blue candle because it opened here. And when price opens, and if it goes higher than its open price, it's going to be a blue candle. If it retraces and go lower than its open price, it turns red. Or even if it opened here and it went lower than its open price, anytime it's lower than its open price, it's red. Anytime it's higher than its open price, it's blue. So all it did was it opened, it either went up and then retraced all the way back down, or it opened and it went down and then went up and then went back down again. And then it closed. Okay. All right. So now for a blue candle, same process. I'm just going to go right to the one next to it. Use the same markings. Now the blue candle can also be a green candle. Okay. It's a matter of your preferences. Remember when we showed with Angela, we right-clicked and we went to properties, and we had my colors for my bar up and bull candle. My bull candles, that means a buy. My bull candle is blue. Some people may make their candles greens. If I change my colors to green, you see it? That's what's going to happen. And then the bar up, that's pretty much what is encased in. But if I made that green as well, my candles would turn green. You see? So some people may be used to looking at their charts like this, and they say, well, why Gary's blue and mine's green? It's just a color preference. Some people have black and white. It's a color preference. But primarily, everybody usually have, when price is going down, represented in red. And when price is going up, they have that represented in blue or green. Okay? So hopefully you guys just caught that. So for the green candle now, price open here. I mean down here, because it's going up. Price open here, and it closed here. But the highest it's been is here, and the lowest it's been is here. Okay? So it opened. This was the high. This was the low. And this is the close. So understand that price can fluctuate in that hour to different points. And all we're trying to do is get in at the right time. And it's not a real serious like guessing game. It's not like a serious gamble. We have certain strategies in place that help us, but we want to get in the right time, and we want to catch what we call pips, a certain number of pips. So you're like, all right, Gary, well, what is pips? Pips, in layman's terms, or as I like to put it, pips is a measurement in price movement. So when we say price was here at 1.07672, and price went up to here to 1.07768, we can use this crosshair tool. The crosshair tool, we just click on that and we'll just bring our mouse over, and then we'll click and drag our mouse, and it'll stretch out a line, which is a measuring tool, to say, oh, well, from there to there, price moved 9 pips. So you're like, well, how you get 9 pips, Gary? Well, you see the number in the middle, the 95, you got a 1/95/1.07768. Well, the 95 is 95 points. 95 points, which in order to get pips, you got to divide that by 10, or you just take off the last number. So you look at the middle number and you just take off the last number, and that's how many pips. That's 9 pips. So from this point to this point, price moved 9 pips. Right. So that's what a pip is. It's a measurement and price movement. So price moved 9 pips. That's how you think of pips. The charts will show you points, and to convert points to pips, you divide the points by 10 to get pips. If you would like to convert from pips to points, you multiply your pips times 10, and that'll give you points. Now, if you was doing it manually, I'm not sure if you guys can see my numbers on the far right. Sometimes it's out of view. But on the far right, you have, say, 1.07659. And let's say you go all the way up to 1.07782. Now, when you enter a trade, and you want to manually enter, say you want to say, okay, I want to enter, say right here, I want to place an entry for trade, and I think price is going to go up. And what I want to do using my trading plan, and I'll go over that, I want to say, I want to enter here, and I want to get, let's say, how we get this? Let's just say you want to get 5 pips. Let's say you want to get 5 pips for this example. So you're saying, okay, I want to place an entry here for a buy, and I want to get 5 pips. So that 52 number, anywhere 50 anything, will be representative of 5 pips. Okay. So how would you do that? Again, pips, 5 pips, multiplied by 10 will give you the points. These numbers over here on the right represents really points of price. So you got to take the number of pips, which is 5, times 10, which is 50. You got to add 50 to that entry number. So if we wanted to go from here to 5 pips, and I'm going to actually do it. Let me do it this way. This would be a better visual. If I can get to another screen, let me use this Word document. You guys see my Word document?
No.
No.
Okay, you can't see my work. Okay, let me make sure I'm sharing it. Okay, here we go.
No.
Thanks for letting me know. Okay, all right. So I'm gonna just write this up so you guys can see it. I'm gonna blow it up. All right. So this will be a good example, visually explained. All right. Now, what we're gonna do, we're gonna go over a couple of scenarios. Let me write this out. We're going to consider converting points to pips. We're going to do pips to points. We're going to do stop loss. We're going to do take profits. We're going to find out how to convert all these items. What does they mean? Okay. All right. So we're going to go over these items, these topics. All right. So that's just my reference. All right. We're going to go over points to pips first. All right. So if you were given points, all right, say you're given points. Let me take off my caps. So let's consider points is like price. So let's say, I'm just going to make up any number. Say that this is your entry. That's your entry point for a trade. Now you say, okay, well, I would like to do, I want to go 20 pips. All right, 20 pips. So he was like, okay, well, it's one way to do it, a drag and drop, but we're going to learn the basics. We're going to learn the manual way, the long division way, so that you know that you know that you know it, and that you can explain it. And then you can also learn the way as if you had a calculator. It's like using, you know, a pencil and a paper versus using a calculator. So the pencil and paper or the long division way is, okay, you had points of 1.0, you had this number, 1, 2, 3, 4, 5, points of this amount. That's your entry point. And what you would like to do is you would like to add 20 pips to this number. Okay. That's what you like to do. And why would you want to do that? Because say that's where you wanted your take profit to be. Okay. So you want your take profit to be 20 pips. All right. So a quick visual. I want to go back and forth. Now this isn't a good chart because you can't get 20 pips. All right, we're going to find one that's all the way over here. All right, let me zoom this up for you. Am I sharing my screen? You guys see my, yeah, you see it. Okay. All right. Let me blow it up. All I'm going to do is hit the zoom in button right here, my magnifying glass, so you guys can see these candles even closer. All right, again, I hit my crosshair tool. I brought it over, and all I'm going to do is show you guys for this particular candle, the pips is what? Anybody can tell me how many pips that price moved on this particular candle?
54.
54.
Oh, we got some A students in here. We got some A students. 54 pips. Okay, for extra credit, 54 pips is how many points?
Is it 5?
54 pips is how many points?
$50?
Nope, nobody got the extra credit. It's a trick question because actually the answer is right in front of you. 54 pips is 540 points.
Times 10.
Yes.
Yeah, it's right there in front of you.
Yeah.
Okay, so 54 pips times 10 is 540 points. So what you're looking at in the middle is really points, you know. So you got to divide it by 10 or just take off the last number and you'll get the pips. So that I'm glad you guys was listening. We got some A students. You just didn't get the A+. Okay. Starting off great. All right. So what we're looking at is this particular body of this candle, price moved 55 pips, which is about 555 points. Okay. So now what we trying to identify is we're trying to say, okay, if we enter this chart and we set a buy at this particular point, entry point, and we expect price to go up. Right now, we're not worrying about if we were correct or not. We're just learning terminology right now and functionality. So we enter right here, and we want price to go 20 points. Now, we trying to figure out where should this line be. Okay, where in reference to this line should this line be? And actually, I'm going to make this green. No, I'm gonna keep that yellow, and I'm gonna make this one green. And the reason why I'm going to make this green is because actually, while I'm doing this, let me tell you what I'm doing, guys. So what I did was I double clicked on here so that I could get this box on here, so I know it's selected. Then I'm right clicking on it, go to horizontal line properties. That's a horizontal line. So you know this the right thing, horizontal line properties. And then I just want to change this color to say green or lime. So that's how I changed the color on that. And it's still selected. You still got the box when that was selected. So all I want to do is I want this to represent my entry point. This is when I hit buy. I hit the button over here. I hit buy. And then this green line showed up. Boom. So that's what happened. In real time, that's what will happen. You hit buy, then this green line show up, but it'll be a dotted line. So that'll be my entry point. Now what I'm trying to do is I'm trying to set a take profit of 20 pips. So I'm trying to determine where should this line be? And we're doing this the manual way, meaning we entering numbers. We'll go on how to do the sort of like fancy, automated, easy peasy way, but let's understand what's really happening first. Okay, so actually we could use these numbers, 76118. That's the entry. That's what this line represents, 76118. So if we go back to our document, we're starting with 76118. Okay, so what we're trying to figure out is if this was the entry point, you want your take profit to be 20 pips. You want to get 20 pips. Again, pips is a movement in price measurement, and you'll understand what the money means when we talk about lot sizes. So, and how it all ties together. Okay, so we wanted to add 20 pips to this. This number represents points. This number represents points, but we have pips, right? So we got to have this. Remember in math, we had to have the same denomination. You can't add apples to oranges to get apples. You got to have apples and apples to have apples, or oranges to oranges to have oranges. It got to be the same denomination. So we have to convert one of these to the other. And what we do is we convert the pips to points. And what do we do? To convert 20 pips to points, what do we do?
Divide by 10.
Multiply by 10.
Uh-oh, we got 50-50, 50-50.
Somebody else needs to come in.
We got a tiebreaker. Come on, don't be shy.
Multiply by 10.
Multiply by 10 has it. 20 times 10 equals 200 points. So 20 pips times 10 will give you 200 points. Now, this is where it gets just a little bit tricky. This is where it gets just a little bit tricky. So you have the 1.76118, right, number. And to add 200 points, you won't do it like this using a calculator or standard math, because what this would give you is 201.7 1.76118. Can you guys see that?
Yeah.
All right. So
You typed in, I'm sorry, I think you typed in.
yeah.
Yeah.
Okay. Thank you.
You're welcome.
All right. All right. So that was Sonia. So now 1.76118 plus 200 will give you 201. That's not how we do it. Okay. So I wonder if I could do a strike through. Let me see styles. Let's do a strike through. Okay. So that's wrong. Just want you to see that visually. That's wrong. What you would do is you would take your points and price, and to add 200 to it, you would have to add it to like the end of it. Like you got to use the last numbers and add the 200 to it. Okay. So, and that, what I mean by that, oh, there's too many spaces. All right. If you add them like that, then it will become 1.7631118. I mean 318. Can you see that? You're adding the 200 points to the 1.76118. So it'll be 8 plus 0, 1 plus 0 is 18. Then 1 plus 2 is 3. And you got your 761. So that's how you would add. You add it on, you line the numbers up on the right side. Don't mind the point, the decimal point. If you did it with a calculator, it's going to give you 201 because it's going to add the whole number to the whole number. Another a fancy way or strategic way to use it on a calculator is, you know that this has 5 numbers, so the last 3 is what you're adding it to. You can do this on a calculator, so it can line property. Add 2 zeros in front of it with a decimal point, and then it will add it, and it will give you this number. So if you was manually trying to figure out how to add 20 pips to your entry point price, you will know to just pretty much add a 0 to their pips, and then know to add that on the tail end, align your numbers to the right to get the right amount of points for your take profit, your first take profit. So 1.76318. If we go back to our chart, if we started right there, 1.76118, and we moved it 1.7, what we at, 6318-ish, almost right there. You see that 1.76319? Like right there, pretty much right there is where you will be at for your 20 pips from here to here. So those will be your that will be your numbers. Your 1.76118, 1.76. If I move it down some, okay, 1.76, somewhere in that area. On my right hand side, it says 1.76318, but when I highlight it, there we go. So that'll be your 20 pip-ish mark. You could be a little bit over, it's okay, but that would be 20 pips from this entry point. All right. And that's what you would say. You'll hear the terminology take profit 1. You want to get 20 pips. Now your stop loss could be the same thing. It could be 20 pips in the opposite direction. The interesting thing about the stop loss, I won't even say that. The interesting thing about pips is it's not a matter really of whether you're doing a buy or a sell. Okay. If you were doing a sell, this number would be, if you wanted a 20 pip stop loss, that number would be your stop loss. It would just be in reverse. If right now we're in a buy, so we're adding to this number. If we were in a sell, we will be subtracting this number. We will be subtracting 20 pips from here. We will be subtracting 20 pips, 200 points from here to get our stop loss. If we are in a buy now, we will subtract 20 or 200 points from here to get our stop loss number. And all I'm doing is doing my horizontal line and I'm changing it to red. Okay. So this will be our entry. This will be our stop loss. This will be our take profit. And this is in a buy situation. Now, nothing changed. The math is still the same, instant with the same numbers. Now, all I didn't do is subtract 200 from 176,118. If I subtracted 200 from that, I would get about 175,9,118. Yeah, that's actually about 20 pips right there. And I just eyeballed that. If I measure from here to here, that's 20 pips. Yeah, 200, that's 20 pips. I just eyeballed that. So this is the entry. If I'm doing a buy, this would be my entry point. I'm expecting the price to go up. And I wanted to take profit at 20 pips and then get out the market. I could have done that on this candle. Now, how much you made would be depending on your lot size. We're going to go in there in a second. If price went in the opposite direction and went down instead of up, then I would have been taken out if price went down to this stop loss. In this scenario right here on this candle, price went in the direction I expected it to go, and it did not go anywhere near my stop loss. So I would have won this trade. Okay. Now, if I wanted to do a sell, it would be the same exact thing, just switching these around. Okay. So now let's say I got it wrong. Since we always talk about being right and positive, let's say I got it wrong. Okay. Can you mute yourself out? If you got background noise, can you mute yourself out? Okay. All right. So if I was going to place a sell, this would be my entry point, this green line, and I place a sell, then the 1.79118 would have been my take profit expected. I would expect the price to go down and for me to get a take profit at that price point. And my stop loss would have been up here. If price went against, I placed a sell, but price went the opposite way, then this would be my take profit. I mean, my stop loss. And in this case, if I was looking at this particular same candle and I placed a sell, price would not have went my way. It would have went this way, and I would have been taken out of the trade at this point. I would have had a loss, and we like to call them lessons. I would have took a lesson, you know, based on whatever price point that I set my lot size to be. We're going to go over lots.
Can you move your take profit?
Yes, you can move your take profit when you're in the trade. Yes, you can do that. When you're in it, let me flip these back around, but the answer is yes. And what that would look like is, say if you enter on this candle, you hit buy, and let's say this is your price. It's going up, it's going down, it's going up, it's going down. And that's what price does. And let's say it's about to hit your take profit, which is the yellow line. You can come in live in a trade and you can say, I want to move my take profit up, you know, and then this can go even higher. And you can say, you know what, I want to move my take profit up again. And you can stay in that trade. So long as price doesn't hit your take profit or your stop loss, you're going to stay in this trade of this currency pair until one of those happen. Either it hits your stop loss or it hits your take profit. And you can even move your stop loss up or down while you're in the trade.
So if you move it, you keep on adding money there. I'm a bit lost there.
If you keep moving it, you said, do you keep on adding money or you keep on making money?
Yeah, adding.
No, once you're in a trade, you cannot add more money to this trade.
Oh, yes. Oh,
Yeah.
Okay, I understand. Thank you.
Okay. You can make more money, but you can't add more money to it. You can make more money by, if price was moving in your favor, you can move your take profit up. And now say if your take profit was supposed to be down here and for you to get your 20 pips and you would have been happy and you're following our trading strategy and our plan, you could have got your profit, boom, and been done. And that's what it been it. But if you said, hey, well, I want to see if price continue to go up, and price could go up. Now you made more than your 20 pips and you're still in the trade.
Oh, thank you. Makes sense. Ooh.
All right. Well, something making sense. I want to give a clap. You know, we're learning something.
Awesome presentation. My God, I've learned a lot.
Okay. And ask questions if you have questions. I want this to resonate, you know, to make sense. You know, absolutely. I like questions. I like engagements. You know, Sonia said, yay. Okay, great. All right. So now that's take profit is when you would like to do exactly that. You want to take profit. You're in profit. When price hits that point, that means you're in profit. You're getting the profit that you want. You want to get out the market with profit. That's what take profit means. Now, when they say take profit 1 or take profit 2 or take profit 3, that's just different entries with different levels that you want price to hit, and you're willing to get out the market at that point in time. Okay. So I'm going to just represent price at different price points. So this right here, this first line, we'll bring this down. Bring this down. And let's even say, all right, there we go. Okay. Let's do it this way. Now, say this first line is my first take profit. This will be one entry. When I enter into this trade, my stop loss is say down here, wherever I set it to. My entry is right here. And let's say my take profit one's there. All right, so this will be my entry. I hit buy, boom. It started right here. What actually happens, guys, so you can know, because you might hear terms like spread, you hear average daily range, and what does that mean? Well, when you hit buy, what actually happens is this might have been your entry point, but you'll see that you looked at that entry and then the green dropped down to like that. What actually happens is the system goes and take a look at this number over here, and that's the spread. Now the spread is actually the amount of points, or let's say pips. What you do when you want to get pips, You divide points by 10, or you take off the last number. So this means the spread. This is how much this entry going to cost you to place this trade. This is what your broker is going to make off of your trade. And guess what? The broker get paid first. So what happens is when you place a buy or sell, you hit entry, you hit buy, your entry point was right here, but your line drops down, say 4 pips, which is a lot. You want to get something that say just, it might just say 1.1 pip, or just a whole number 8 by itself. That's like less than 1. You want to get like 1 pip or 2 pip if you can, but it's the cost of doing business. But this is what your broker gets. So what happens is that automatically, if we're looking at the bottom of this blue candle, when you hit buy, your green line drops down. In this example, about 4 pips. And that's your spread. That's what you got to pay your broker. So that's already taken consideration. So that means once you get price gets back here, okay, your broker was paid, and now anything from there is all yours. Okay, so if this was your entry point, this is your stop loss, this is your take profit 1. That means when price get up here, boom, on that particular entry, you're taken out of the market on that particular entry. If you place more than 1 entry, and let's say, okay, well, you had a take profit 2 for a second entry and a take profit 3, that means when price hit this level, you were taken out of that trade for that particular trade entry. If price hit this entry, you were taken out and you made that profit and was taken out of that trade at that point in time. And once it hit that one, you were taken out that time. Now, that may or may not happen just like that. Sometimes you could be taken out of a trade because price hits your stop loss. If we look at, let's say, what's a good one? All right. Let's say, I'm gonna keep it on a buy. Okay, this is a good one. Over here on this blue candle, I'm just gonna give you a sample with a take profit 1, take profit 2. All right, let's say you enter price close, boom, this price close, that means that's the end of this hour. This red candle right here, price close right here where this green line at. So that was the end of the hour. Now, the next hour started, price opened here at this price point, and it might have fell at first and it was red. You enter right here at this when it started. It fell right here, but it didn't hit your stop loss. So it was going the opposite direction and it didn't hit your stop loss. So that's good. It retraced back, and you'll hear that word retrace. That means retracted back, went the opposite way, and then it started to go up. So price started to go up. Boom, boom. Now you had to take profit 1, boom, it hit that. You took profit. You made some money right there. Now you had a second entry that you decided to go into, and you made it up here. You made your take profit 2 up there. So price got right here and said, whoop. It didn't hit your take profit. So you're still in this trade, and price retraced back down and closed. So in that hour, that's where price ended up at. You did take profit on this line right here. So let's move that out of the way. Now let's go back. So you did take profit on that one, and you got out of the trade. Where was I? I lost my trade. Okay, it's down here. Okay. So price never hit price never hit this take profit right here. Okay. So now we're into this next candle. And remember our entry was right here. We got our first take profit. It didn't hit our second take profit. So now price opened up and price rose and it hit your take profit. So that's an example of you could have been in this trade in this hour. You got your first take profit, price closed. You didn't get this take profit here on this hour, and they went into another hour. Price, even though this candle is red and you're in a buy situation, at one point in time, price went up and you made profit, even though by the end of the hour, price ended up in a sell situation. You took profit right there, and that took you out of there on that one. All right, so we're gonna move that out the way. Now you have a take profit 3 up here.
Gary, can I ask a question?
Go ahead, Isaac.
That is definitely something I didn't know. So you still can profit even in a sell candle?
Absolutely, if it hits your take profit. Price fluctuate. Okay. Price can fluctuate and hit your take profit. See, this red candle and this wick meant that the fact that this is a red candle, all it means is that price closed below its opening point. Now, price could have went higher than its opening point, but by the end of the hour, depending on what time frame you're on, it could have been at the end of the 5 minutes, could have end of 30 minutes, into 4 hours. We're on a 4-hour chart right now, but at the end of the time frame, price closed below its opening point. So that's the only reason why it's red, is because price closed below its opening point. But during that time frame, price opened and it was above its opening point at some point in time. But by the end of the time frame, it closed below it. So yes, yes, you could have got taken out right here in profit because it would have been blue. Yep, you're welcome. All right, so now moving on to take profit 3. We made profit on take profit 1. We took profit on this next hour or 4 hours on take profit 2. Now we're still in a trade because we still trying to hit our take profit 3 entry. What would have happened is in this same situation, price would have went as high as here, and it wouldn't have went up there, but it would have went as high as here. It would have came down, and then boom, it would have hit your stop loss. So on this particular situation, you wouldn't have hit your take profit. You would have been taken out of the trade at a loss, at a lesson, as we like to say. So if we had started right here with all our entries, if we started right here on all our entries, the first one would have gave us a profit up here, the second one gave us a profit up here, and the third one, price, would have went all the way into this next time frame, and it went up, didn't hit that take profit, it would have went down and took us out. So our loss on the third entry would have won on the first two. Our loss would have been from our entry point of this blue candle at the bottom, if we enter right there, and to our stop loss. Now, right here, how many pips? How many pips we would have took a loss on?
$11.
11, exactly, 11 pips. So depending on what our lot size, which we'll cover next real quick, we would have took a loss of 11 pips, okay? So the standard pips would have been about, well, on this ADR, would have been about 20, we probably would have set it to. So we would have took a chance of losing 20 pips on that particular scenario. But again, we practice risk tolerance, we practice not being greedy, and practicing patience, and so on and so forth. Now, one thing I want to point out before I cover lot size is this ADR. This ADR changes depending on what pair you are in. On this chart, the ADR is 50. But on this chart, the ADR is 110. The ADR stands for average daily range. The average daily range represents exactly what it says. The daily average of the range in which price have moved, over the last 10 days. And you'll look at the today's range that price have moved so far. So if today's range of price moved has been 77 points, and the average range on this particular currency pair is 110, then you have a little bit of wiggle room to get some more points or pips in this chart. And usually when it's almost close to this average daily range amount, that just usually means that you're probably almost at the end of the day. But if this number is low, like 12, and the average daily range is 110, you're probably in the beginning of the day and price haven't moved that much. So that's what these numbers mean. The average daily range is give you an idea of how much price moved for this particular pair on average. And today's range is how much price have moved so far. So whether you should consider still trading this pair, being in this pair or not, these numbers will help you determine that. You're like, well, that's kind of, if this was like 90 and this is 110, you're like, nah, I want to trade in this pair. There's not that much more possible wiggle room to get, some money out of. All right. Now, so hopefully that makes sense. That's an indicator. That's something that you can read. So we went over spread. We went over today's range. We went over the average daily range. Okay. While I'm here, I might as well say these items right here is the time frames in which the average trend is. This is the minute. This is the month. This is the week. This is the day. This is the 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, and 1 minute. And what it's saying is on the monthly chart, overall, this currency pair is in a downtrend. So is on the weekly chart. And then the green means, or sometimes it might be blue, if you got your bar candles, bull candles that's blue, then that means that daily 4 hour, 1 hour, 3 minute, 30 minute, 15 minute time frames, that overall is in a bullish or uptrend. Okay, so if you're trading on those time charts, that's the direction that overall price is moving. Okay, so right now we're on the 4 hour chart, and as you can see, the 4 hour chart, it says overall price is moving in a uptrend, in an upward direction. And that's one indicator. You also, once you learn about the moving averages, you'll know what that means as well. All right, so that's what these numbers and graphs all mean, all over here on the right hand side. You'll see this number, the yellow number, which is all kind of mixed up, but there you go. This number right here, when we are live, this will basically show you the time frame before the next candle is about to show up. So it'd be like a countdown. That's like a countdown timer. So, okay. Anybody have any questions with that? Okay. All right, just quick recap. We went over open, high, low, close. That's what these numbers mean over here. Went over average daily range. Today's range. We went over the spread, which is paid to the broker. We went over the countdown timer before the next candle is going to display itself. That's how much time you have left in that trade. We went over a bullish, whether it be green or blue. We went over a red, which is sell, a bear candle, which is red. We went over entry point. We went over stop loss. We went over take profit, 1, 2, and 3. We went over points and pips. So those are all terminologies. And by me clicking on some of these buttons, it's a little bit of functionality. We haven't went over any strategies. We're just going over terminologies and functionalities. And once you understand this and grasp it, you can start speaking it. You can start speaking it. Eventually, it will become fluent. Now, you can't apply it yet because we didn't get to application and implementation. But you can speak it. You start to understand the language that's being spoken. Okay? So if I go over here to my little document again.
Hey Gary, the spread. What is the average spread you're looking for?
A low spread. You want to get a low spread because the spread is what you're giving up. The spread is what you're paying your broker. And these are in points. Remember, to convert points to pips, you take the last number off or you divide it by 10. That'll give you the pips. So when you basically to enter this trade at this point in time, if it was 46 points, you got to pay your broker for pips, of 46 points. So before you even start to make money. So that's why when you hit buy or sell, when you see the numbers that are orange or blue, they start off as negative. You always enter a trade in the negative because the first person that get paid is your broker. So when you get started, you'll see that you don't really want to trade when the market first opens. These period separators, these dotted lines, for those who don't know, are the start and the end of the trading cycle, or the day. So this would be the previous day, this would be the next day. This would be the next day. So this is when the market resets itself, where these period separators are. And you really do not want to trade around close to that time. One, on this side, is not that much movement. You'll see for your points or your today's range is almost close to your average daily range because there already was enough movement in that day. It's not going to be that much that you could get out of that trade and out that currency pair at that point in time. So around this time where the period separator is, one is not going to be enough movement left on this side. And right here, the spread is going to be high. When the market resets itself and opens, the spread is going to be high. It kind of like find its way and, settle down once you get, say, somewhere around here. So just be mindful of that spread. Some people don't mind, if their strategy is working, they'll feel as though they're going to get a lot of points, so they'll incur that cost. But you want this to be like a 1 right here and another number, or just one number all by itself, like an 8 all by itself, or 12. But all this is saying is just how much it's going to cost you to enter this trade before you get into profit. All right. All right, so we go back to the spreadsheet. I would say, let me see, we covered a lot. We covered pips to points.
Hi, Gary.
Go for it. Who we got here? I'm on my sheet. I can't see my screen. Hello? Can't hear you. Must got a bad connection.
Gary. Hi, it's Desiree.
Hey, Desiree.
Hi, good day, everyone. With the chart itself, I'm trying to, let's see, we have the crosshairs, right? How do you get the markup for the pips? What exactly are you pressing something? Or yeah.
Okay. All right. To see the amount of pips, you click on the crosshairs. So
Right.
that'll be indented. And then all you got to do is I'm gonna go over here. Like my hands is off my mouse right now. I just got this crosshairs just sitting on the screen. Now all I'm doing is I'm just moving my mouse around, and you'll see this too. Now when I want to measure how many pips, I'll hold my mouse right click down, I'll hold that, and then I'll drag my mouse while I'm still holding down my right click part of my mouse. And then that starts to take my measurements. You know, it doesn't matter if I'm over here, I'm just bringing it off to the side. You'll see a lot of traders moving it off to the side because when you have it like lined up right here, you can't see your line. Like you can't really see your line. So they just want to see the numbers will still be the same even if you're moving it across. So you'll see if you just move it over. If I go over here and say if I wanted to measure that candle, I want to see, you know, exactly how far I am. So I'll just move my line over just to see. But sometimes I can't see what's going on or where my line is at when I got it straight up. So I use my crosshairs, I click down, I drag my mouse over, and all I'm doing is just looking at the numbers in the middle of the two slashes. And then I take the number that's in between the two slashes and I take the last number off, or I just divide by 10. So that'll be 34 pips from this point right here to this point up here. It'd be 34 pips. Or if I still held it down and dragged it up, I would know that this candle, I could have at least got 54 pips out of it. So it's the crosshairs tool. Click on it. Just move your mouse to wherever. Once you want to start measuring, you press down on the right part of the mouse. You drag your mouse over, up, whatever, or down, you know, and you'll see how many pips of movement. Pips, again, is the measurement and price movement. Say from this point to this point, price, if it went from there to there, it moved 15 pips or 150 points. Okay.
Great. Thank you very much, Gabby.
All right.
Gary.
Yes. Hey, Rahela.
Hi. In the beginning, you had said that when the 10 moving average crosses the 50 moving average, there we can do a sell or buy.
It's an indication for an opportunity for a sell or buy. Yes.
Yes, but like I don't see it crossing. I was also trying to, you know, play around with my chart yesterday, and I just didn't see the 10 moving average crossing the 50 moving average in any case.
Right. Well, it doesn't happen every day. It doesn't happen on every pair, you know, so you'll trade on more than one. Right here is happening. Right here. You'll trade on more than one chart, you know, and it all depends. Like right here is happening. Across, boom, 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 on more than one chart. So you're waiting for that, and it's okay. You know, sometimes the best thing to do is to stay out of the market. You know, that's profitable too. Capital preservation. So you'll have times when it crosses, and sometimes it don't cross. It may cross on one chart, or it may not cross on 3 charts. You know, it depends on the time of day, which is where I said you get to the point where you get those call levels and call alerts and the apps that notify you when it happens. So you won't become a slave to the chart. You don't want to be sitting there watching the chart all day. So once you're really ready to trade, I know you were playing around with it and you're getting hands-on experience, and that's awesome. But if you go through this 4-step phase or process that I talk about, I would say by the time you're really actually ready to trade and put your money in there and everything, you would have went through this process and you will be getting these call levels and alerts, and you won't become a slave to the charts, and you'll just get notified, say, hey, Rahela, you know, the 10 just crossed the 50. You might want to go take a look at that, as opposed to looking around at every chart and say, what's going on? I'm looking for that. That's when you'll get to that level. Right now, we're in the beginning stages, but you still play around with it as you are and look for those opportunities. Okay. Anybody else? Before I just cover lot sizes real quick. All right. Okay, so on lot sizes. We did take profit, we did stop loss, we did pips and points. Okay, lot size. A lot size is where the money comes in at. Now you'll hear fancy terms, you hear the definitions, a lot size being 100,000 units, you know, a volume, you know, even if we Google is what is a lot size in Forex, we can look at, that's another thing. If you don't understand something, you can Google it. So a standard lot size is the equivalent of 100,000 units of base currency in a Forex trade, you know, and you can click on these down items, you know, 0.01 lot size or 1,000 units, or micro lot is the smallest position size when we talk about standard Forex accounts. A standard lot size of Forex is 1 lot, and it's equal to 100,000 units or $10 each pip gain. Now that's ultimately where you want to be. Now I know some of that might even sound confusing, but in the layman's terms, you know, you got what we call a micro lot size, a mini lot size, and a standard lot size. Okay. So we're talking about a 0.01. We're talking about a 0.1, and we're talking about a 1 point, let's say, oh, let me put some zeros behind here so these numbers can look better. All right. So the micro lot size will be 0.01. The mini lot size will be 0.1. And the standard lot size is 1.0. Now, even that may seem a little bit confusing. So make it make sense, Gary. All right. Basically, what this means is lot size is what the system understands. When you're placing a lot size, you're going to your platform, MetaTrader 4, and over here, you're choosing a lot size that you want to enter in the system to place an entry. You're setting a dollar value per pip movement, gain or loss. So what the system interprets this to mean is if you enter in a lot size of 0.01, you're placing a buy for Great Britain pound. Since we don't, I mean, yeah, we don't GJ. Now that's how they would say it. They would say GJ, but it's Great Britain pound to Japanese yen. So you're placing a buy on GJ of 0.01 lot size, which means that's equivalent to 10 cents per price movement. So we was right here, and I placed the lot size of 0.01, a buy. Then that means I'm betting or I'm trading for Great Britain pound. Let's say if this was 26 pips, 27 pips, then I will be saying that, okay, if I'm placing a buy, I'm looking for price to go up. And if I'm going to do 20 pips, that means 20 times 10 cents is what I can earn if I had a lot size of 0.01. 20 times 10 cents, which is likely $2 I could gain. You're not rich? Nope, you're not rich at all. But if you had a lot size of $1, which would be 0.1, I'm gonna clarify, I'm gonna flush it out, as they say. I'm gonna flush it out for you in a second. But if I had a lot size of 0.1 instead of 0.01, then that would be $1 instead of 10 cents per pip. That would be $1 per pip. So 20 times $1 would be $20 I could have gained in the same exact situation. Now a standard lot size is $10, which is 1.0. 1.0, 1.0 will be $10. So $10 times 20 will be $200. So you could have made, in 20 movements in the right direction, you could have made $2, or you could have made $20, or you could have made $200, depending on what your lot size is. So how do we calculate that? Similar to how we do, it's not the same exact math, but just how we were calculating pips from points. The way we determine the dollar value of a lot size. Let's see, this is the lot size. Let's say this is the dollar value. And this is the last thing I'm gonna cover, guys, for today. All right. Unless you have some extra questions. Now, the lot size, all you had to do is move the decimal 1 time to the right. All right. Move the decimal 1 time to the right to get the dollar value. So if we had a lot size of 0.01 and we wanted to get the dollar value, we would say 0.01. If we move the decimal point 1 time to the right, we like that. Okay. All right. For a 0.10, move it 1 time to the right. And you understand that. That looks better. All we did was move the decimal point 1 time to the right. If we had a lot size of 1.0, and we moved it 1 time to the right, every $10. So some people, when they first get started, they don't understand this and they blow their account. They blow their account because say you have a budget of $50 and you did a 20 pip take profit, 20 pip take profit, and you said, okay, I'm going to place my lot size as 1. And you want to go 20 pips. But let's say price went against you 20 pips. Pop quiz, can anybody tell me 20 pips, lot size 1? How much is that? 20 pips and lot size is 1. How much money? How much is that?
100.
$200, exactly. $200. So you had a situation where you had a budget of $50 and price went the wrong direction. You just went $200 negative in the wrong direction. So you blew your account. And people do that because they do not know what they're doing. They don't understand it. So they think the 1 means $1. No, 1 in a lot size means $10 per pip. So it could be a great.
Gary.
Yes, go for it.
Yeah, so you had said if you had a $50 in your account and then you lose the 200, but you didn't have the $50 in your account. So how does that, is it like you're on credit after that?
You're in debt to the broker. You're in debt to the broker, $150. So you need to make up that difference. You catch that?
Yes.
Not clear. Can you repeat it, please?
If you had a $50 budget in your brokerage account.
Yes.
and you placed a lot size of 1, thinking that it was $1, but it was $10. And you placed a buy trade, but it didn't go in the upward direction. It went in the downward direction and sell. And it went down, 20 pips.
Okay.
Then you would be in a negative $200. But since you have $50 in your account, you'll be in negative $150. Now, in some cases,
Okay.
given what your amount that you have in your account, in some cases, the company won't allow you to even have a stop loss of a certain amount in case it goes in the wrong direction, because you don't have enough money in your account. But you also have what you call leverage, which is why sometimes it does allow for you to go in a negative, because they give you, that's when they start to talk about margin and leverage. You can go into the negative, but you can't really go into another trade until you top up your account, because it's in a negative. So you won't be able to trade anymore. Okay.
Yeah. Okay. Thank
So
you.
we don't want that to happen. So
Thank you.
So this is how you go from, this is what lot size mean, this is what it's equivalent to. Now it's no different. This is a great example. It's no different when you see your trading plan, and with your trading plan, just say, for example, let's say you have a $250 account, 3%. And let's say your trading plan says, okay, let me pick on Desiree. Say, okay, Desiree, your trading plan says, as far as what you want to accomplish with this skill and with your budget of $250, you want to get 3% out of the market. So, and you want to consistently come in using our strategies eventually and turn your $250 to hopefully around $300,000 by following your trading plan. That's just your plan. That's not my plan or anybody else's plan. This is just for entertainment purposes and educational purposes only. What that means is, okay, you want to get $7.50 today out of the market if you were starting on day 1. And let's say you're going to place a trade for 10 pips. Your trading plan says, okay, based on what your budget is, based on what your daily growth is, based on what you're trying to get accomplished, if you're going to place one trade today and you're trying to get your 3% of your 250, which would be $7.50, which if you get that, you'll have $257.50. If placing one trade today for 10 pips, your lot size should be 0.08. So your trading plan tells you what your lot size will be. Now, what is 0.08 equivalent to? Can anybody tell me in dollar value?
8 cents?
How much? How much?
8 cents? 8 cents?
8 cents? No, not 8 cents. Not 8 cents.
80 cents. Is it 80?
Yes, 80 cents. 80 cents. If we taking notes or taking some screenshots, we know that 0.0 something, you move the decimal place one time to the right to get the dollar value. So 0.08 will be 0.8 in dollar value, which is 80 cents. To go from lot size to dollar value, just move the decimal point one time to the right. To go from dollar value to lot size, move the decimal point one time to the left. Okay, so that's your trick. That's your trick of points and pips and lot size and dollar value. So now you'll know the equivalent of what is happening when you set your lot size. How much is that really equivalent to? This 0.08 is equivalent to 80 cents a pip. This 0.10 is equivalent to $1, a pip. So as you go in using your trading plan, and you supposed to get this amount the next day out of the market, this amount the next day out of the market, and it's telling you this is what your lot size should be, you would know what the dollar value is. And we also have a helpful tool over here. You just type in the dollar value right here, 0.08, and it'll show you right here is 0.80, the dollar value, the pip dollar value is 0.80. You know, so that's your little cheat sheet. You got that right here in your trading plan. So if you're moving, look, 80 cents per pip, and you're getting 10 pips, what's 10 times 80 cents? $8. So you're getting your 3%ish. Okay? So 80 cents moved 10 times in the right direction is $8. 80 cents per pip is $8. And you will have covered your goal for today. $1 moved at 10 pips is $10. Look, you would have covered your goal for that day. So you're going the same amount of pips. You're just changing your lot size each day to get your 3% of your previous amount to meet your goal. So what I like about that scenario, and I keep it that simple, is because you're just trying to, I gotta get a larger time frame. What I'm doing, guys, is I look at the ADR, because the ADR, these candles represents larger numbers and price move faster. When the ADR is that high, that means price move faster. But when I go to an ADR that's less than 100, price moves slower. So if I was to measure one of these candles, even if it's a large one, that's only 10 pips. For this large candle, it's 10 pips. But if I go to another chart where the ADR is 141 over 100, let's say even if I did candle about the same size, that's 12 pips on that one. Okay, that's 23 pips. So I'm just trying to get a larger number for representation purposes. So if we just trying to go 10 pips, we could have went a buy on here, and we could have went from here to here and got out 10 pips and been done. You have 24 candles in a time frame on our chart. You have 24 candles, 24 hours. Now, we wouldn't say place a bet on all 24, but we have a strategy in place that we'll teach on which candles and what time you want to get in. But you're just trying to get 10 pips on one candle and you're done. It's night, you're done for the day. One candle, 10 pips, you're done for the day. That can be your strategy. Our trading plan does show you that you can get 20 pips. You can go for 30 pips or even 40 pips. This is your take profit, 10 pips, 20 pips, 40 pips. This is what your stop loss should be. And we'll go over this, next, but not on this training. We'll go over all this. But this is what your lot size will be. And that's what your trading plan is showing you, what your lot size should be. Okay? And that's how you convert your lot size to dollars. Okay? Lot size to dollar value. And even if it's a 8, that just say move your decimal point one time to the right, from here to the right to have 0.8, and you'll have 80 cents per pip. Okay. It's no different. A 9 will be $90 per pip. A lot size of 9 is $90 per pip. So that's terminology and functionality. Some terminology and some for functionality, guys. Stop loss, take profit. You have your open high, low close. You have your spread. You have your countdown timer. You have your bar at the top that shows you the trends that we're in. You know, that's terminology and functionality. Okay. We even cover period separators. Someone asked a question about that. We have period separators. Okay. Now, additionally, we'll eventually go into moving averages and other indicators, bank levels, MACDs, so on and so forth. But that's enough in a nutshell. So you can feel as though you had a lesson today. You learned something today. Anybody learned something new today? Don't be shy. Have anybody learned something new
A
today?
lot, Gary, a lot.
Yes, indeed.
Oh, I've learned a lot. I'm so
Thank
so
you, Gary.
excited I came today. Oh,
Yes,
thank you,
indeed.
Gary.
Now,
We have learned a lot.
awesome.
I'm so excited today. I was frustrated.
Yay.
Yeah.
See, I'm happy. Y'all made my day. Y'all learned something new. And that's important. It's the mindset. It's when you first get in, you get excited because people say you can click a button. I even will tell you, you can click a button and make money. You can, but you're just not ready for that. But that's your end goal. Click a button and make money from your laptop, from your cell phone. That's the end goal. But there's a process to it. And once you get past that shock of, oh man, I can't click a button right now to make money, and calm down, to slow down and learn that other people had to learn terminology and functionality first. Don't compare your beginning to their middle of their career. We have different training and traders in place to meet people where they're at. I like to be in the beginner's lounge, you know, slow it down step by step. You know, let's go over what everything means first. We'll get to strategies. We'll get to clicking buttons. You know, we'll get to waking up in the wee hours of the morning when you guys get ready for that. Woo, you know, but we'll basically get to all of that. But once you are able to identify and understand what all these items mean on a chart, you'll feel much better. And actually, you'll even be well informed and more educated than others who just wanted to get right into strategies and learning, okay, I want to, you know, place a buy here. When this happens, they may get to that, but they don't know what everything else means. They'll try to do that and they won't know how to do it when they're by themselves because they haven't learned terminology, functionality, what these numbers mean, how to convert pips to points, convert lot sizes to dollar values. Okay. So I'm gonna leave it at that. That's it in a nutshell. I'll send the schedule out to you guys via email, what to expect, send you alerts and updates if I'm coming on, other trainers coming on, and what you guys could expect and look into. If anybody have any questions, you know, feel free to unmute yourself and ask. If not, we'll close this out. And hopefully, again, that you guys got some value out of this, you know, training today.
Yes, sir.
Okay. And that's what we look for. We look for value because you feel good, you feel learned, you feel great, and you're getting something out of it. Eventually, you may want to tell somebody. All right. Well, again, guys, I'm not the best at looking at the chat. I know you guys may make comments, and I'm not good at checking the chat. That's why I asked you to unmute yourself. I like engagements and talking, but I want to thank you guys for coming today. And till next time, I'll see you on the next one. I will be back on Thursday at 10 a.m. for the morning session, and I'll be back later on this evening at 5 for the strategy session. Okay, thank you for your time, guys. Take care of yourself.
Thanks, Gary.
And
Thank
What
you.
about charts, Gary? You said you'll tell us whether you can help Monday or Tuesday.
Oh yeah, Monday or Tuesday, I'll send out notice for a chart setup. I'll send out a notice and let you guys know whether it be Monday or Tuesday.
Okay.
What day I'll set aside and I can help whoever needs chart setup getting their chart set up.
Oh, thank you. Thank you.
All right. All right. Take care, guys.
All right.
Take
Have
care,
a good
guys.
Bye.
Bye-bye. And there you have it, guys. We have live training sessions. We even have pre-recorded videos for beginners, intermediate, and advanced so that you can learn at your own pace. So whatever your flavor, get back to the person that referred you. If you would like to join us, we'd like to see you on the other side as a student. But until next time, take care of yourself and each other. Bye-bye.